A very good evening to all of you, and welcome to another round of weekly market update presentation by SC Securities. So, as usual, I'll start from the this week's market performance, and then we'll continue to economic highlights, and also most importantly, we will be discussing about the global commodity front and also international financial markets as well. So, starting off with this week's Colombo Stock Exchange performance, as you can clearly see in the screen. For this week too, market headed towards another weekly loss, whereas both the indices, SPI and S&P SL 20 index, dived in a red pool. So starting off from the market performance on Monday, during Monday's trading session, the SPI lost 10 points to close at 7,888.69, whereas S&P SL 20 index, which consists of market heavyweights, lost 14 points to close at 2,545.75. And if you look at the turnover levels, that was relatively lower from this year's average, whereas it stood around 777 million for the day. And foreign purchases and sales were also marked as very low amounts, whereas foreign sales pick up to 14 million over 8 million worth of foreign purchases reported. So this kind of a negative sentiment caused due to the market mid-margin calls resulting heavy selling pressure to the market, and apart from that, the Prime Minister's recent acknowledgement regarding that Sri Lanka is going to face harder than anticipated 3 weeks coming ahead without having enough stocks of fuel and gas. So with all these investor sentiments further turn negative, and majority of the market analysts are in view that there is not a single indication for market to move up with all these looming economic uncertainties. So the same trend was continued throughout the rest of the days in the week, as we had a public holiday fallen on Tuesday. So during Wednesday, Thursday, and Friday's trading session, market further fell down. So during Tuesday's trading session, SPI lost 116 points to close at 7,772, whereas S&P SL 20 index also lost 60 points to close at 2,485. And the market turnover, however, pick up to 1.1 billion over 777 million turnover reported in the previous day. And foreign purchases and sales too pick up for the day, but foreign sales stopped at 161 million over 155 million worth of foreign purchases. And during Thursday's trading session, SPI further declined by 66 points to close at 7,705, whereas S&P SL 20 index also lost 22 points to close at 2,463. And market turnover again dipped to a level of 786 million, which was comparatively lower from the previous day's turnover level. And foreign purchases and sales reported as foreign sales 49 million, and foreign sales again lower from that, which was only amounted to be 33 million. And during Friday's trading session, that means today, market again witnessed a huge decline of 232 points to close at 7,472, and S&P SL 20 index with market heavyweights also witnessed a loss of 94 points to close at 2,368.65. So the turnover level again, however, picked up from the previous day's turnover, which was amounted to be 1.2 billion, but the foreign purchases and sales were not that strong. But anyhow, foreign sales picked up during the day to report a value of 62 million over 45 million worth of foreign purchases reported. So So far for the year, the ASPI is said to have declined by 36%, whereas it is 42% down from its all-time high recorded in early this year, which was amounted to be 13,462.39. And if we have an overall we look at this week's market performance. The top gainers for the week includes Blue Diamond's non-voting share and Dialog Finance and also Fortress Resorts, whereas the top losers consist of SMB Leasing non-voting share, and that was followed by Valuable One and LOLC Finance. So for the entire week, SPI lost by 5.4%, whereas S&P SL 20 index fell by 7.5%, and the foreigners reported a net outflow of 45 million. So for this week, Treasury yields for the decline for all the three yields, whereas now the 3-month Treasury yields stood at 20.73%. It was declined by 118 basis points from its previous yield, and 6-month currently stand at 21.90%, and 12-month yield stand at 22.04%. Then when it comes to the spot rates, the exchange rates, rupee managed to slightly appreciate over USD, GBP and EUR, but somewhat depreciated against yen for this week. And if we have a look at the economic highlights for this week, the central bank recently came up with the external sector performance statistics for the month end April. And as accordingly, the export sector had witnessed an increase on year basis of around 18.5%. If I tell you about the numerical values, the exports were reported as 118 million US dollar for the corresponding period in year 2021, whereas for now it has increased to 970 million, and the imports again decline for another consecutive month amidst the policy measures that were recently implemented by the government. So imports have declined by 0.5% year on year, which stood at 1,699 million US dollars. So with that, the trade deficit said to have declined. The trade deficit for the month was declined to 729 million over 889 million from the previous year corresponding period. However, cumulative deficit up to April 2022 was amounted to be 3.13 billion, and fuel said to fuel continue to be the major contributor with respect to the said cumulative deficit. And when it comes to the overall export performance, under exports, industrial and agricultural sectors said to have grown up, whereas consumer imports declined by 15.4%. Looking at the imports, overall imports performance for the month, the intermediate picked up during the month, and the consumer imports, as I said you previously, has declined by 15.4%, and the investment good too said to have witnessed a decline. And the earnings from tourism represent a noteworthy increase on year basis, but compared to that with the March 2022 performance, it represents a slight decline. And worker remittances, however, declined for this month too, apart from the policy measures that has been established by the central bank to encourage foreign employees to send foreign remittances to Sri Lanka through official channels. And apart from that, the Cabinet of Ministers has recently given the approval to propose 2.5% social security contribution tax bill, and as that was proposed by the previous budget for the year 2022, and the proposed tax is expected to charge from importers, manufacturers, service providers, wholesalers and retailers whose turnover exceeds 102 million rupees per annum. From this overall tax, the government expect to raise a total amount of 140 billion rupees. However, the Ceylon Chamber of Commerce in a recent statement mentioned that the proposed tax will have an adverse impact on low margin businesses, including those who are entitled to price controls. And apart from that, some parties are in the view that the 140 billion expectation is somewhat an overestimation from the government, because the SSC tax, or the Social Security Consideration tax, is somewhat similar to nation building tax. So their expectations from this tax is somewhat higher than that should have been. Then, looking at the international front, the global commodity markets, oil prices were slightly edged down as of the Federal Reserve's rate hike that I'm expecting to explain in a detailed way. And the gold prices, however, gained higher amid of the weakness, the mild weakness in US dollar, but copper prices and aluminium prices continue to decline for another straight session. So looking at the global markets, majority of the global markets worried over Federal Reserve's historic rate hike, as we mentioned in the previous week, and as it was expected by global investors. Federal Reserve increased its key policy rates by 75 basis points, and that was the biggest amount of increase after 1994. And it give the idea, and with that in the intention of stemming its rising inflation within the country. And the US central bank officials have acknowledged the move will erode the public trust in their power, and it has been increasingly evident that the events seen out of their hands. As of an immediate reaction, the global markets gained on the day after the policy meeting held. But anyhow, by the very end of the week, we could have seen majority of the market ended up with huge losses. So apart from the United States, British Central Bank and surprisingly Swiss Central Bank also came up with rate hikes, whereas Switzerland Central Bank increased its policy rates by 50 basis points almost after 15 years. However, Bank of Japan bucked the wave of monetary tightening and decided to stick with their ultra low interest regime. And as a result of that, Japanese yen has reportedly fallen by 1.9% on Friday. So, because of these reasons, especially with the rate hike from the US front, majority of the global markets ended up in losses for the week. But surprisingly, the Chinese market gained for the week, but that was even after some couple of volatile sessions. So that's all from my end. Saliya, over to you to continue the presentation.
Thank you, Sachini. Good evening, all. Let me start with the ASI first. As you can remember, last Friday, which was the 10th of June, the index closed with a shooting star here, but it was a bullish close, testing a high of 7,962.22. Unfortunately, from Monday onwards, 4 days in a row, the market retraced. On Monday, there you can see that there's a doji candle here with a bearish close, and thereafter we can see that there is a shaven headed candle which is known as a Marubosu candle, and also a spinning top. Thereafter another Marubosu candle today with a larger distance compared to the Wednesday's price range, and it came down and closed at 7,472.39, which is above this high low. When the downtrend from January continued, on the 27th of April made a lower low of 6724.39. Thereafter, it made a high on the 29th of April, high of 7811.65, and then there was a reversal, making a low of 7422.57 on the 6th of May. So thus making a high low formation. So you had a lower low, a higher lower low to a high, and then a higher low. Thereafter, the index broke the high and made another higher high. And presently, we have come back again to test that range of the high low position of 7422 to 7426. So that's basically an ideal area of a reversal. But given um, uh, the formation of the candles and the momentum, there is a chance that it could break below 7426 and try to find support between 7426 and 6904 and make a reversal inside that area. Else, it will come and retest the previous lower low of 6724.39. Any reversal to the upside will be bullish for the ASI, and any time the 6724.39 is going to be breached and broken on a closing basis, then the downtrend will continue. The downtrend that started from January will continue. But for the time being, we need to watch the area between 7426 and 6904. Moving on to CIC, which is our chart of the week, which we started covering from last week. Last Friday, the stock made a spinning top with a bearish close. So we were expecting this downtrend to continue and take support between 37.30 and 34.10. But due to the bullish interest amongst the buyers, it didn't come down, but started extending from Monday onwards to test the R1 zone of 42 rupees. In fact, on Monday, it made a very strong open Marabou's candle and made a high of 42.50 and closed exactly at the bottom level of the R1, which was 42 rupees. But the next day it was a hanging man. Then you can see that there is another bearish bearish candle. Then today's shaven-headed this bearish Marubosu candle has formed. As a result, just like we expected first to take support between 37.30 and 34.10, the prices have now come back or retraced below 37.30, and next week we either might see that there is a reversal inside this zone, or if this downtrend is going to continue, we'll come and test that 37.30 to 34.10 before a reversal to the upside takes place. Else the price will take strong support inside the support zone between 31.20 and 34.10. So let's watch this area and also this support to see how the prices are behaving during next week. Then talking of the US crude, last week we were here and we saw these two bearish candles on the 9th of June and on the 10th of June. And these bearish candles, we expected the trend to continue down to the downside. And it did so. It came down to take, once again, test the daily resistance zone between $110 to $115.40 when it came down and made a low of $112.31. That was yesterday, making a bullish close with a hammer. And today we can see right now it's it has broken above yesterday's high of $118.08, and now um, testing and testing an area of a little below the bottom of the daily resistance of $119. Uh, and it is testing $118.78 as the high. Now, the the bearish momentum that started from here, we need to see a reversal to a bullish momentum. You can see even the MACD, the MACD line has crossed below the signal line on the daily chart. Then the RSI also has retraced and trying to take to position itself above 50 points of the RSI. As a result of that, let's watch how the prices are going to behave with this reversal, making a swing low here. With this swing low formation, whether the prices are going to respect the trend reversal to the upside, and whether it will once again retest the daily resistance between 119 and $123.70. Incidentally, before, even though there was a bearish reversal here, we can see 2 days afterwards it tried to extend to test the $123.70 when it went and tested a high of $123.68. So that's basically the high, the present high with a present low of 112.31. This extension to the upside will retest the 123.70 level, and a breakout above that will take the prices to test in between these two resistance zones, between $123.70 to $126.80. And if there is a strong extension, we will see the prices testing the resistance inside this zone as well. So it will be interesting to see how US crude is going to perform during the next 7 days. That's all for the day. I hope you will find it very interesting to go through our technical analysis. Until we meet again next week, let me wish you all the very best during the coming week. Thank you very much. Good night.